you guys heard the speed run commentary and the option trade piece. I'll come back and record that at the end of this little session. We'll just keep going. So we spent some time on DIA. That's what the daily trade looks like in here. So the big sell-off, and we just walk through the different strategies for collapsing dragons after the Fed spike. There was a Z3 pinch breakout that allowed us some opportunities. But then when you get the RL270, especially crossing back over the VWAP to the downside, now these are all opportunities to get short on collapsing dragons. And there was a 6% move available, and here that was available. And then when you see the bellies of the dragons being violated, you get a nice move in here for the collapsing dragon short with an owl exit, and you even have an owl back to the VWAP. But when the VWAP gets rejected with lower highs, and then you start seeing the market or the MACD histogram down here tripping into winter, that's telling you that your intraday posture should be short. So not a lot of swing trading going on. So we're just going to take a quick look at some of these. Let's see, dailies, and let's look at 3 months just for point of reference. Yeah. Okay, so Devon Energy, the energy sector itself kind of voted down today. No position there. Emerging markets sold off. The EFA sold off today. Japan sold off. Now, what's interesting here to me is that Mexico had relatively less sell-off. It held near yesterday's low, so there was actually Mexico gives you some nice intraday moves. So on that, I talked yesterday about the hybrid frog giving you some moves. So I just want you to notice how beautifully EWW Mexico plays on intraday with like frog boxes and collapsing dragons, very orderly swing moves. So these are all very tradable with collapsing dragons and then owls and then collapsing dragons once more. And then again, notice when the RL270 stops going up and starts to roll over, that's telling you, hey, it's looking like the downside. By this time, we already knew the market was going to be down because of the leadership of the U.S. to the downside. So you should be able to take advantage of these intraday frog champions and the way that they move intraday. So I'm going to shift to Brazil in the same way. Again, look at the beauty intraday sell-offs that you get from this kind of approach of intraday hybrid frog and collapsing dragons on market selling days. Once more, the key thing to look for is when you see the RL270 crosses the VWAP, and that's in conjunction with going into the winter on MACD histogram, my friends, that is licensed to print money. This is money printing time when you see this kind of a signal. That is money printing. It's going from 39.50 to 38. That's $1.50 on 40, right? So that's well over 4%. So that's as far as I'm going to go in the speed run, I think, because I really want you just to concentrate on that lesson, and then I want to look at the let's what the heck, let's be consistent, Kenneth. Home Depot. I'll finish the speed run. I sort of owe you that. So Home Depot gave back. So remember, we got long on this one on Monday. So there was an opportunity anywhere in here. You could have, from this peak high of 237, you had $10, $13 worth of sell-off to decide how much of this swing trade did you want to just capture. So that's really a choice you get to make. And when the market is this volatile and swing in, sideways volatile markets, if you want to take those exits, I'm not going to be offended by that. It's your bottom line. That's the way I approach it. So you can see the Russell 2000 was much worse. So I tried this one as a long on Monday as a speculation and so my exit was in here like at Z-1 because I wanted to get paid a little bit. So that's what my swing trade's going to look like there. Real estate, it had a nice move up, and again, this is one of those where if you took an exit, because we tried this one as a defensive play on a swing, any exit anywhere today would make you happy. And then we can figure out tomorrow when and how we're going to re-enter. Coal also had general weakness along with the rest of the energy sector, although it's relatively immune to those wild volatility plays. McDonald's was another one that we worked a swing trade on, and again, any exit anywhere in here during the day would make you very, very happy. So you had an opportunity to exit anywhere from about 207 to 199. PBW, same thing. If you exited here, I wouldn't be offended, but that's one I think if you're respecting your initial risk, just move that to no lose plus dinner for two, and you're pretty happy with that. Energy sector continuing to suffer. The S-Dow was a big gainer today. That's a hybrid frog intraday. The speculation, I'm still going to hold that in Galactic. That's such a long-term speculation. I'm thinking about holding that one for a year, so I'm still honoring my original stop. Simon Property Group gave back and scratched. If you had gotten long, this would have been a good day to scratch. Treasuries gave. This was our exit on the swing yesterday. So Treasuries ended up netting positive. So that may be one where if you buy above the close tomorrow, don't wait for the swing high. Just get it if it has any kind of, I would say, a move above about 157. I think you could safely buy that with a $5 stop. Tesla gave back today. This was a perfect hybrid frog. If you're hybrid frogging Tesla. Natural gas gapped up but then sold off. Again, this is like coal, so you can actually, I think, play this as a swing. I'm not, but I think you could. Oil held up relatively well compared to the big broad indexes. UVXY was a big winner intraday in the same way that the Dow was a big loser. I'm going to jump down here to wheat and precious metals. This is one that was a beauty in core and turbo, and I'm going to show you. So I bought this one yesterday as a swing with a stop down here, and then I was able to add turbo to it. So let me show that one if I can pull it up on the screen. That was the turbo. I got to show the intraday move on this one. Stand by. So today I want you to notice the hybrid frog opportunity. So if you just are using this as like the minimum risk box at 25 or 30 cents, you get that entry right around 29.75, which was also a mechanical entry, and it never looked back until it got to 31.40. So that's $2 on 29, which is a 6% intraday. And then if you were awesome and played the Z3 breakdown, you get that move, and then an owl re-entry. So just on this one alone, the hybrid frog move on the defensive play, and it still closed it closed up 4% for the day. So I'm telling you, that's an 8% intraday move up on two very well-defined legs, and then a 3% sell-off, and then a regain of 2%. That's why wheat and precious metals is my preferred intraday precious metals proxy. U.S. Steel, going back to the dailies, if I may. And this is one where just stalking it, materials sold off but held up better than some of the other sectors. Energy was not bad. Yeah, but I would tell you that natural gas and coal and oil did better than the broad energy sector, than the companies themselves. Financials got smashed today, and then technology also gave up a lot of the gains from yesterday as well. So that was a nice. XLK is a pretty decent intraday hybrid frog approach, so we'll take a look at that one as well. And again, you see the big spike up from the Fed announcement, and then nothing but decay. And then once again, again, here's the tell. When it's decaying and the RL270 crosses the VWAP and you get a rejection of the summer into the fall, now these are all collapsing dragon entries here. You get another one here. And those are the intraday safe plays, and then you're out of the position for overnight. So there's nothing wrong with that. All right. So let's go to the daily report real quick. Get through that rascal. Yeah. Okay. So March 3rd. So here was today's range. You notice the sell-off. We closed weekly inside the daily range. We're about in the bottom quarter of the 10 and the 30-day look-back period. We're now below that 10% correction sell-off. We're deep into the winter. We're at minus 10 on the MACD Four Seasons. So that's our short bias and deeply in the winter. So you shouldn't be thinking about the long swing. Sideways volatile. We're at minus 3 sigma on the risk Z. You can see the 10-day max pains. These are the ones that you ought to be looking at as opportunities to be short. So notice how the Dow, the leveraged Dow, is the one to really be piling on. And then that's metals, or I'm sorry, that's energy, regional banks. So those are the ones where the things that are going to suffer from global slowdowns are energy, financials, and then the large cap techs who are trying to preserve their big outsized gains. So all those are easy targets on the intraday for hybrid frogs, along with the usual suspects like Brazil and Mexico. Okay, so that's what I want to say. You don't even have to look further than that for tomorrow. And now you'll notice that everything is in the low end of neutral on all the multiple lookbacks. So that's what we got going on right now, guys. Okay, so if there's no questions, let me get this processed. I need to get the other one processed. I will hang that video from Bill's presentation in the Patreon section for the bronze folks. I may put that. Now I'm going to put it in for the $25 level too, because I just think screw it. Everybody needs to see that, because it will shape your long term. Now, if you like those kinds of ideas, guys, I'm telling you the bronze subscription is a pretty good investment in your long term protection. That's what I can say about that. So instead of me gaming you on that one, I'm just going to give you the insights from there. And if that's the kind of insight you like for longer term position trading and longer term swing trading, please consider supporting at that level in order to keep the momentum going. So take good care. I'll see you in the chat room. Keep your risk measured and your powder dry. Hey, we announced the streaming only workshop for VTI for me is going to be, I think it's 6 and 7 June. What I'm going to do is prepare some materials for the 37 strategies. I'm going to do some 37 or 41 lessons for that, for background material. And then the folks who sign up through VTI are going to pay that full price for that webinar. But if you want to take those lessons at a deeply discounted price, be on the lookout for doing that same prep material as a reward for being a subscriber directly to me. That's going to be a good deal for you. But that's coming. The homework for that should be ready by 1 April. I'm going to make a real effort to get that done, so you have 4 to 8 weeks of being able to study those 40 strategies, and then we will tailor the streaming FAQ session to your questions and answers. So the thing that I'm going to do in June is going to be to respond to the VTI cadre, the VTI students. I'm going to record a session with my answering their questions, but I'm going to do the same thing for you guys, and I'll do that in May. So so be on the lookout for announcing that special form of longer term streaming home study courses. Okay, so that's going to be all brand new material. So take good care. Thanks for hanging in there. Thanks for all the support. Keep your risk measured and your powder dry, and let's go take care of business.